please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're still watching Power Breakfast on CNBC TV18. Well, from 78 rupees in July to nearly 87 rupees today, petrol prices have been on a rise, and sources in the oil ministry say they are concerned. And this could impact inflation and the agri sector. The oil ministry has thrown the ball in the finance ministry's court over a potential cut to the excise duty on fuel. But what are the realistic options before the government? Prashant Nair is here with a quick snapshot of the rise in fuel prices and what the government can potentially do to combat it.
Prices have been rising, and we are paying some of the highest we have ever had, especially in a city like Mumbai. 87 rupees for petrol, 75 for diesel. Prices have gone up 8%, by the way, for petrol and diesel, about 11% this financial year so far. So, I mean, you know, it's a big increase. We know the reasons, but people want to know what can the government do to shield consumers. The options aren't that many. You know, many free market proponents would like a hands-off approach. This is globally said, this is a global phenomenon, let it be. Well, can the government do that? We don't know, but that is what stock markets, for example, would like. Second is cap retail sort of prices. But that would mean the government at the end of the day subsidizes oil marketing companies. The third option, the government comes in and cuts excise duties. It would lose revenue. And the fourth is ask states to cut VAT, something that not many states have actually done. What is the scope for these cuts in excise, really? From a central government perspective, what is the scope for cuts? The central government increased excise duty on diesel and petrol from 3.5 rupees on diesel to 17.3 rupees a litre, and for petrol from 9.5 rupees to 21.5 odd rupees. This is the time when oil prices were actually falling, and with this increase, big increase in excise duties, they mopped up all this revenue. And hence, we've had one cut, by the way, in excise duties, and that's been about approximately 2 odd rupees or so. So many people ask, why can't, now that the global oil price is rising, the government pass on some of the benefit? The second is state VAT, value-added tax. I mean, this varies quite a bit, but, you know, again, Mumbai has some of the highest rates of VAT. Can states cut it? Sure, they can. Some have, not many. And the central sort of government ministers, etc., have said that we will ask states to cut. Can they be persuaded to is another matter completely. Why do many believe that the government is in a bit of a fix as far as the situation is concerned? The problem is the government isn't in a very good financial position at this point in time. GST revenues, for example, are already running behind budgeted estimates. Direct tax revenues, for example, aren't looking all that buoyant at this point in time. So can the central government lose revenue on this account? If it loses revenue on this account, where will it make up the other this lost revenue from? Can it tax something else? Will it come to that? The other point is, can states really be persuaded to sort of, you know, share this burden and provide relief to consumers? Many believe that the time for the government to act, the central government to act, was when there was a bit of a lull in oil prices, global oil prices. It should have put in some policies, you know, maybe cut excise, because anything that the government does now would seem extremely reactive. Back to you.
All right, thanks a lot for that, Prashant. We will keep an eye out on that story as it develops. But back home on the last trade yesterday, the market ended lower for the second consecutive day, with the broader markets actually taking it on the chin. The Nifty, while it breached the 11,550 mark, but recouped some losses to end with cuts of about 0.5%. The Sensex shed about 150 points in trade. The broader markets, that's where the underperformance was there. The Nifty Bank shed more than 350 points. The mid-caps ended about 550 points lower, and the rupee continues its downtrend. Anisha, the cues don't look so good as far as yesterday is concerned. Is it going to be the same today?
Well, the cues are a bit somber, to be honest, Manglam. And as you mentioned, it was the crude gain as well as the rupee fall, as well as the issues related to the FPI investors is what really keeping the markets under pressure. In fact, not just yesterday. If you look at the trade setup since Friday, we've lost over 480 points when it comes to the Sensex. The Nifty is down about 160 points, and Bank Nifty, now that one has lost close to 600 points in the last two sessions itself. And as you mentioned, what really took it on the chin yesterday was the mid-cap space. pace, down over 500 points, down about 2.7%. Now, despite this, situation as far as the market is concerned, the flows picture does not look too bad because we are looking at a FII net buy figure of 32 crores, while the DIIs, they net sold around 22 crore rupees in the cash markets yesterday. So not a very bad number coming in. But of course, the talking point and the key headline yesterday was the rupee hitting the fresh low. Now, intraday it slipped to the level of 71.67, but ended at a fresh record close of around 71.58. Remember, it's the fifth consecutive session of fall that we have seen it against the dollar. In fact, the dollar just last week was trading at the 94.5 level mark. Today, it was trading around 95.5 mark. Other action, the currency was also in the Argentinian currency, wherein the government there is looking to get some accelerated help from IMF. So keep an eye out on that as well. The other important macro cue to track is the yields number, because that is now above the 8% mark. Yesterday it closed at 8.06 level. That was the highest that we have seen in the last 3.5-4 years. The other important cue is, of course, crude, because yesterday that went up to the level of 79.72. Yes, it has retraced some of the gains, but it's still hovering around that $78 per barrel mark. And keep an eye out for today as well, because the storm Gordon is expected to worsen a bit and turn into a hurricane. So that is one important factor to watch out for. Other than that, the global markets, as you talked about, the US markets ended in the red. That one after they were shut on Monday on account of Labor Day. There are two important things that the investors are watching out there. Of course, it's the trade talks with Canada that are expected to restart today. And secondly, the impending tariffs on $200 billion worth of Chinese goods is expected to kick in this week. So that is something that is keeping the investors nervous there. European markets, well, they ended in a deep shade of red as well. CAC and the German DAX, for example, were down about over 1% in trade, and FTSE also down about 0.5%. The Asian markets early this morning are trading in the red territory. The SGX Nifty, for starters, is also suggesting a tad bit of red tick. So let's see how the second half of the trade pans out, whether some buying returns. But as of now, the cues look somber.
Okay. And what about the stocks?
Of course, apart from the crude and rupee-related stocks and the move in the banking space, we'll watch out for a lot of order wins. Goldium International, for example, has received an export order for around 140 crores. This is the first export order, and given the company size, this could be meaningful. McNally Bharat had received an order of 107 crores. Texmo Pipes has received order of around 81 crores. So these will be stocks in focus in green. Muthoot Finance is looking to raise some funds, as well as came out with Q1 numbers. That looked all right, because it is highest quarter-on-quarter loan growth that they reported in the last 11 quarters. So that one should also see a bit of green tick. Chakran Prakashan will be in focus because they have purchased around 37% stake in one of the associate companies. Now the total stake stands at around 45%, but in the overall scheme of things, not very material. IGPL, wherein the promoters have sold some stake, but Birla mutual funds had bought around 3% stake. So keep an eye out on that. Government officials have exclusively told CNBC TV18 that LIC will not be seeking any exemption for the IDBI Bank open offer. Now, this is a developing story, and we'll keep getting you more updates on that. But keep an eye out on IDBI Bank today. And one interesting move wherein Shivinder Singh actually has moved NCLT against his own brother, Malvinder Singh. So that will be very important to track as well. Back to you.
Okay, all right, Anisha. Thanks very much for that. With regards to that particular piece of news of Shivinder Singh moving to the NCLT court against his brother as well as Sunil Godwani, and there's actually no stock which is really impacted anymore on account of this. So that's an important development. But nonetheless, it is not going to impact the likes of Fortis or any other stock which is associated with them.
All right, Ekta, thanks a lot for putting that out. With that, we will shift focus back to the market itself. In fact, market-wise, we spoke with Ashburton's big bets right now in the Indian markets. They're both pharma and consumption. In a conversation with CNBC TV18, he spoke about his focus on Sun Pharma, also added that consumption, while it's an expensive sector to be in.
I think pharmaceuticals is an interesting space. That's been more recent. Obviously, it's taken some time before that space seems to be now picking up. And that seems to actually be replicated globally as well, with healthcare across the globe seeming to finally start to outperform. We've already got actually full positions, certainly in IT. We did add to some of our pharma positions about 3 or 4 months ago, which has worked quite well. Potentially we could, we have been looking at some various other pharma stocks away from the mainline names. But at the moment we're quite focused on one stock, which is Sun Pharma, which has done very well more recently. But we have been looking for another name to add, but we haven't done anything just yet. I think when you look at particularly the consumer staples names, you couldn't argue anyway to say that the valuations are attractive. I think valuations in some of the staples names are quite frankly stratospheric. You know, the Hindustan Unilevers and names of similar sort of categories or similar names as that, they're trading at almost unheard of valuations. Away from some of the staples names which people are again herding into in this time of uncertainty, there are pockets of value to be had, but I think you have to really focus on the bottom upside here, because as a whole, consumption is an expensive area to be in at the moment.
Welcome back. It's Power Breakfast on CNBC TV18 that you're watching. With that, we move on to a CNBC TV18 exclusive. Our colleague Tim C. Jaipuria caught up with Commerce Secretary Anup Wadhawan and sought his response on several important issues and challenges facing the Indian economy. Here's that conversation.
Today, Rupee has hit a record low, and yes, it remains a concern for our trade industry. Also, exports are not doing well at all.
The facts, no, exports are growing. Exports are growing by over 15%.
So, but trade deficit is also expanding.
Exports have been growing for the last 2 years. Trade deficit has to live with the reality of global petroleum prices. So there's nothing new in that. Global petroleum prices have been going up. You're all aware of that. So what is so surprising about it? Trade deficit will go up, and I think suitable actions will be taken.
So what about your talks with US? Our 2+2 talks also, sources say that India is again going to pitch for relaxations in the H-1B visa norms, etc.
2+2 talks, you should speak to the government departments which are concerned with those. Commerce is not directly concerned.
So what about visa issue, sir? Visa issue continues to remain with US. Do you think our dialogue once it begins with US, will that also be part of it?
See, both countries have various issues which will be continuously discussed. It's an ongoing process. Visas, to the extent they are an issue for us, they will continue to be discussed. To the extent there are some issues for the US, they will continue to be discussed. So there's nothing so...
What about the retaliatory tariffs that were being mulled upon? The notification is still being held and it has been postponed.
No, you are entirely aware of what the position is, so what do you want to know?
So when will these tariffs kick in? Will India still wait on those tariffs?
You know the entire position as it stands today. I have nothing to add to it. You know what the position is today, and I have nothing to add to it.
So
where is the doubt in your mind about the position today? The position is well known. Where is the doubt?
Okay, well, on to an exclusive now. The government sources tell CNBC TV18 that LIC will in fact be making an open offer to IDBI Bank's shareholders as it plans to raise its stake in the company to 51%. According to SEBI's guidelines, an acquisition of any listed company mandates the acquiring company to make an offer to shareholders. Earlier reports had claimed that LIC will be seeking an exemption from SEBI to not make an open offer to IDBI Bank shareholders, but government sources confirmed that LIC will be making an open offer to buy 36% of the stake. It currently holds about 8% and plans to buy the remaining 7% via preferential allotment.
Okay, then with that, we'll step into yet another short break. Come back, we talk about IATAs raising concerns over the Indian aviation space. That exclusive